Bitcoin has to reach certain levels of market size and liquidity before it even interests certain bigger players to get in. So when Bitcoin had $1,000 in daily trading volume, a person couldn't put in $1 million. When Bitcoin had $1 million in daily trading volume,
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discuss about Bitcoin and crypto. According to Lyn Alden, there is once more a bull market. You are aware that for them, that's only the second cycle, notwithstanding the possibility that Bitcoin's sixth cycle. And when you look naturally, if you examine a price chart in linear format, those are not even visible past price increases. So Lyn Alden say you'll only ever actually possess your recall or visual form. You can view the last few cycles. So Lyn believed that people must experience a few cycles. Not only that Bitcoin has seen those cycles, but they've witnessed it. Pass through those cycles that are crucial, and two of the volatility remains a problem unless it's not really until it's extensively used. And lots of things Lyn Alden discuss. So please watch the video to end and share this video, and subscribe our channel, Everyday Finance. Thanks.
so it's hard to predict. I'm not a psychologist, but one thing is I think that what matters for people is how many times they've seen it come and go.
Yeah.
So if you were not aware of the first three cycles, for example, and you knew about it in the fourth cycle, or at least you paid attention to the price, you remember seeing it in a bull market, you remember seeing it in a bear market, you've seen a bull market again. That for them, that's only the second cycle, even if it might be the fifth cycle of Bitcoin. And when you look, of course, if you look at a price chart in linear form, you don't even see those earlier price bumps. So you only ever really have your memory, or in visual form, you see the past couple cycles. So I think people have to go through a handful of cycles, not just that Bitcoin's gone through those cycles, but that they've seen it gone through those cycles. I think that's important. And two, the volatility is still an issue until it's not, basically until it's widely adopted and liquid enough. And I think there's a couple ways to think about this. So, I mean, if you're in Argentina or Nigeria or Lebanon or Turkey or wherever, a general trend in developed markets is that people want dollars. I know, physicians in Egypt that stack physical dollars in their apartment for lack of knowing what else they're going to do with their savings. They might hold some gold, they might hold some physical cash dollars, and then they'll buy a second apartment, which might or may not be empty, just to have something more tangible, right? So. And one of the challenges in these markets is that banks and airports, you can only bring so much cash through an airport. Banks are only willing. Usually, it's hard to get dollars from the banks in these countries. Usually, you have to get out on the street market, like the gray market or the black market. And stable coins are a way that kind of pierces in there. It gives people another avenue to get dollars. That's why they're somewhat popular now. But of course, the problem is they're still centralized, right? So all that someone is doing with a stable coin is, instead of trusting their local banks to hold their dollars, or not even being allowed to, it's basically just an offshore bank account for the middle class. That's what a stable coin is, and it's centralized, and it's just that the central hub is not in their country. Now, so basically, dollars are essentially predators for any weaker currency, like all these developing market currencies. And where Bitcoin comes in is a couple different ways. One is if it starts to get more widely adopted and liquid enough that it has less volatility, and the volatility it does have is still in an upward trend in price.
According to Lyn Alden, Bitcoin needs to get to specific heights, size, and liquidity of the market. Prior to it, even a track some larger players got in when the value of Bitcoin was $1,000 volume of everyday trading, that a person couldn't invest $1 million when Bitcoin received $1 million everyday volume of trade, that a billionaire couldn't. You're aware that you couldn't enter with billions of dollars knowing that it wasn't ready for a sailor yet. For instance, well, when $1 billion are traded there every day, enormous financial reserves, such as $1 trillion, the dollar insurance fund, simply put, they look at that. It resembles a tiny pond for them. It seems as though they would sneeze at it, and that would be all would alter the cost when it happens, billions upon trillions of dollars volume, compared to these larger players, and begin observing it, such that it appears to be you need to at least partially saturate. You have to reach a particular degree before you even receive a response from the next level. So Lyn Alden say we've arrived at this stage where there are black rocks. Kindness prevails of focusing on it. Thus, one is merely you're able to continue rising in that one mental cycle. So individuals who, when an individual is observed 3 cycles, for instance, are difficult to disregard, followed by 2, that liquidity, and subsequently the other angle, which is one that's how Bitcoin seems to be winning, the dollar is losing value in another way. Dollar falling on its own. Let's back to the Lyn Alden interview.
So a lot of people here, maybe not everyone, is seeing what happened in the recent bond market move, right? So long end bonds have sold off dramatically in recent weeks and months. The yields are spiking. And, whether or not what happens in the next few months or whatever, I think that's not the big story. The big story is that historically when you get larger and larger debt in an economy, eventually you run into a big bubble. And then what happens is the public sector absorbs that debt onto the public sector. Right? So that's what we saw in Japan over the past 30 years. We saw a gigantic private debt bubble and then kind of a deleveraging, printing money, and then a lot of that debt is now on the public sector, and the private sector in Japan has less debt relative to other metrics than it used to, less net debt, because a lot of that's now on the public sector. And in the United States, we saw pre-global financial crisis, we saw more and more private debt growth. Then we saw the whole collapse and the money printing. And now we see some degree of household deleveraging and things like that, but all that debt's now on the public level. And then what happens is when you run into the next cycle or the one after that, and all that debt's already on the public level, you're getting higher and higher interest expense. You're not offsetting it with lower and lower interest rates, right? So for example, during the past 40 years in the United States, we had higher and higher public debt to GDP, and we had lower and lower interest rates. So the interest expense on the public debt was never really a problem. But once we hit the point where you hit 0 and you bounce off 0, and now you're just kind of either going sideways or you're going up in interest rates while you're still going up in debt to GDP ratios, that's when you start to get into an outright fiscal spiral. And if the Fed finds itself having to do QE, even when they have above target inflation, because they just have to monetize the deficits, that's kind of a checkmate scenario. We already see Japan in that scenario. So
do you think we've crossed that event horizon now?
I think we're flirting with the event horizon.
Okay.
Yeah, I mean, basically, once you get over, say, 100% debt to GDP, and it's usually a couple mix. It's usually like you get above a certain amount, you bounce off 0 interest rates, now you're just either flat to up, and then you run into some degree of commodity shortage, energy shortage, a pandemic, whatever. You run into some sort of like supply side thing, and that combination is like fireworks.
Yeah.
And so Japan today, they have a 2% inflation target. They've been above their target, and they're still doing QE because they're in that weird position. So money creation happens in one of 2 ways. Either banks lend it into existence with fractional reserve banking, or you monetize very large government deficits. And when public debt is small, like say back in the United States in the 70s, most money creation comes from bank lending. And if you raise interest rates, you kind of slow down the bank lending. And although you do increase the government deficit because of your interest expense, that's a smaller portion. So higher interest rates are suppressive for money creation. Whereas if you are all the way in Japan's case, where you have like 250% debt to GDP and very little bank lending, it's a very sluggish economy. If you raise rates, you're actually potentially accelerating money supply growth because now the government is pouring more money into the economy due to payments on its own debt levels.
Which is very counterintuitive.
Yes.
Yeah.
And so that's kind of either the end stage of the currency or at least kind of the end stage of what, say, Ray Dalio would call a long-term debt cycle. So some sort of major devaluation, recapitalization of the market. So if the dollar trips over itself, and the Fed finds itself in kind of what Japan's doing. But, Japan has a trade surplus, current account surplus. They've built up a positive net international investment position. The United States is running a structural trade deficit. And if they also find themselves forced to constantly do QE just to maintain the bond market, and Bitcoin's still here, and people have seen 3 cycles of Bitcoin, I wouldn't want to be short Bitcoin, let's say.
Yeah.
According to Lyn Alden, with this 30 or 40-year-old technology, we can indeed, it's much better on Bitcoin. You are aware that we use certain types of encryption on a financial instrument that's currently more appropriate for it. Therefore, Lyn Alden truly ecstatic that it has only been possibly. You are aware of a few years of growth, you possess years of theoretical knowledge, years of growth, and a few of these goods are beginning to appear on the market they have, like test apps available there and such stuff, and Lyn actually rather happy about that. Improvement in privacy as well as UX enhancement compared to the medium exchange components. And you can naturally determine if you're utilizing those kinds of systems. You develop a significant equilibrium, you access discounts from cold storage since you are there. That's where you assume greater risk the more money you have under custodianship. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.